In this video, I wanted to explain the difference between trading versus investing. I'll begin with investing, and the intention behind investing is long-term, and it is intended to accumulate wealth and growth. And it requires patience since it's actually a long-term accumulation of wealth, and it requires financial statement analysis, financial ratio analysis, economic analysis, industry and sector analysis, and much more. You need to know your companies that you're investing. You need to know the portfolio that you actually create. And most investors choose to diversify. And sometimes the diversification can be through your own portfolio, or you can actually diversify through investing in ETFs. You could have market ETFs, index ETFs, some sectoral or industry ETFs, or country ETFs. And in some cases, you could also choose to invest in mutual funds, although it seems that mutual funds have a little bit higher expense ratios. But both ETFs and mutual funds do serve the purpose of having the diversification effect for your portfolio. Investing can find help, or investors can find help through licensed financial advisors. And notice I actually used advisors with a need. That's actually how the legal definition of it is in the financial literature. And you also have to understand that these licenses require people to be tested, and then years of experience, and to be underwritten by companies, or in some cases through an association. Like, for instance, the CFA is a chartered financial advisors, analysts, and therefore you need to be chartered through the association of the CFAs. You have to be careful about unlicensed financial advisors. There are so many people out there through either Twitter or they're just pretending to be financial advisors, pretending to know so much. And there's so much fraud and scam out there that try to give you investing ideas or try to take your money out of your already created portfolios and try to scam or fraud you out of your money. Trading, on the other hand, requires, unlike investing, requires frequent buying and selling. So with investing, we invest for a long term, and we create wealth, and we accumulate wealth, and we wait, we are patient, and we try to make good investment choices by investing in companies that we know and we evaluated. But with respect to trading, it is a lot shorter period of time and a higher frequency of buying and selling. And we intend to generate income through trading. So some people refer to this as day trading. Not necessarily has to be daily, but it is a short period of trading activity, which requires luck. And you need to watch the markets closely, and you need to know or go through technical analysis, which again, many people believe that technical analysis works, but if it was so easy, or if it really works, then how come all these people who are doing expert analysis of technical analysis are they're not in Bahamas and sipping their pina coladas? But the difference again between investing and trading is that investing is for accumulation and creation and growth of wealth through longer period of time, through investing in individual stocks or bonds or ETFs or other securities. So for instance, you buy a house, which may be an investment for you, or you buy an antique car or an antique furniture, which may be an investment for you. But trading, on the other hand, is shorter periods of time, higher frequency, and they're intended to generate smaller income, and it requires significant more active involvement with the market, involvement with the stocks or the securities, and it requires luck, in my opinion. So while trading, you have to be careful of people, companies, or websites that claim to be good at trading, that promise trading tips, and that people offer trading strategies. There's a lot of fraud and scams out there, and just keep asking yourself, if they were really good at stock trading, why would they just need your money? There are programs that say, give me $1 and then I'll give you tips, and these tips you can trade on it and then make millions of dollars. I mean, if you can make millions of dollars out of just that, stock trading tip, then why would you need me to pay you whatever you're asking me to pay? It's just very simple. A lot of the times you have to be careful as to what is wishful thinking in trading and what are real results. People brag about their positive trading experience, but they hardly talk about how much money they have lost overall. If you had 10 trades and if one of them was very successful and 9 of them were a bust, people seem to talk about that one successful trade and brag about it so much that the other 9 are just overlooked. Trading may be similar to gambling, and people with very little knowledge of what they're trading may be very similar to going to a roulette table and just putting your money on a black or a red and then spinning the wheel. It just, you're basically, when you invest in a stock, it either can go up or down. It's a very simple thing. So it can turn into gambling quite easily and quite fast. There's a huge industry that makes money off of stock traders. People who provide information, trading platforms, TV channels, ads, and all sorts of industry that literally makes money off of people who hope to generate income through trading stocks. Like I said, this is a simple, explanation of the difference between investing and trading. And we do get this quite often, how people think that finance is similar to gambling. Well, if you're talking about trading, yeah, sure, it can be. But if you're talking about investing, it requires significantly more involvement with the investments that you're making. And that requires patience, that requires work, that requires knowledge, knowing your tools. And trading and investing are two distinct features that are included in the field of finance. So, well, thank you for watching, and have a great day.